Ghana's debt risk is being fueled by the country's deteriorating public finances, and the country may need an IMF bailout to be able to restore confidence from investors. Analysts believe that lenders may not be keen on refinancing Ghana's euro bonds once the U.S. Federal Reserve Bank finally increases interest rates. What Ghana is facing is fast rising debt levels and choking interest payments that are putting it at growing risk of a crisis. While strong global commodity markets means Ghana's economy is expected to grow a respectable 6% this year, the threat of another double-digit fiscal deficit means its already crushing debt burden will almost certainly worsen. Global ratings agency Moody's Investors Service downgraded the government of Ghana's long-term issuer and senior unsecured debt ratings to CAA1 from B3 and changed the outlook to stable from negative. According to the ratings note, the downgrade reflects the increasingly difficult task the government faces in addressing its intertwined liquidity and debt challenges. But not only has Ghana pushed back against the downgrade by Moody's and Fitch, it has also said there is nothing to worry about. The government says it is committed to fiscal consolidation and debt sustainability in its economic recovery. Fiscal consolidation hopes hinge on ambitious revenue assumptions. The government has projected its deficit, including energy and financial sector costs, will fall to 7.4% this year, but many economists think it's more likely to be around 10%. Weak revenue generation is constraining the government's budget flexibility, and tight funding conditions on international markets have forced the government to rely on costly debts with a shorter maturity. Today, our focus is on Ghana as the country faces a liquidity crunch amid a ratings downgrade. This is Business Edge. I'm Tolulope Adeleru Balogun. Welcome to the show. My guest today is Dr. Josh Bamfo, partner and head of transfer pricing and economic advisory services for Andersen, Nigeria. Dr. Josh, welcome back to Business Edge. Thank you so much for joining me.
Thank you for having me, Tolulope.
So let's look at this current situation that West Africa's second largest economy has found itself. And it stems from issues around its level of debt, debt financing, the intertwined liquidity and debt issues that are coming together. And given how well Ghana performed during the pandemic, how it's been performing in recent years, this might come as a surprise to many and to others maybe not. But how did Ghana find itself in this current position now where these forecasts and these downgrades are what the country is battling?
All right, thanks for the question. I think clearly this couldn't be something that occurred overnight. You don't incur that amount of debt overnight, right? So over time, I think even though the economy has done pretty well under the current government, if you look at other macroeconomic indicators, there's a lot to be said from a positive perspective when you look at the Ghana economy. If you look at GDP growth rate since the current government took over in 2017, on the average, the economy has grown over 6%. 2017, it was over 8%, 2018, over 6%, 2019, over 6%. Then we had the pandemic in 2020. So clearly that is an exogenous shock, which wasn't anticipated by any government across the globe. So you can really pardon the government that, look, this was something that nobody expected. It's an extraordinary event. And there was the need for governments to urgently, save lives and save livelihoods. That means that there was excess spending in terms of, health equipment and all that in order to save lives, and also support both the business sector and the household sector to ensure that, we don't dig ourselves too deep a hole in terms of the recession, so that recovery will be much easier. So Ghana clearly had things going on well. Inflation reduced from almost 20% to single digit under the current government. So that was great. Foreign exchange market became stable. That was great, making sure that businesses were thriving. However, one area that has always been Ghana's Achilles heel in recent times has been its debt situation. They've always had a debt sustainability issue. And this stems historically. Remember in 2004, under the Kufuor government, we had had a similar situation where our debt to GDP ratio was over 100%, and it was unsustainable. And there was no way we could actually go on an economic growth and drive, in a sustained manner. So what did we do? We entered into HIPC, which is a highly indebted poor country program, where the international financial institutions such as IMF forgave our debt. So our debt to GDP ratio as of 2006 dropped significantly to around 21%. Since then, we've been gradually accumulating higher debt, especially at the time that the GDP wasn't growing at the same rate. As of 2016, in fact, if you look at 2012, when the previous government took over, that's the Muhammad government took over, our debt to GDP ratio was 35%. So it was still significantly below the prohibitive threshold, which is 70%. Between 2012 and 2016, which is the last year of the previous government, we have added almost 20%. We moved from 23.5 to almost 55.5%. So already we're having this debt challenge. When the current government took over, as of 2017, the debt to GDP ratio was hovering around 56%. By 2019, it was around 62%. During the the pandemic, it then jumped from 62% to around 78%, depending on which data you're looking at. So the government says as of November, it was around 78%. If Fitch, it's arguing it's around 80% by the end of 2021. So clearly, this did not creep up on us. We knew it was a challenge. However, what we didn't expect was that this was going to be, this problem was going to escalate under the pandemic. So what the current government had tried to do at the time was to roll over some debt, make it much longer term, ensure that we're investing in areas that the economy could grow. And because as long as the economy is growing at a high rate, right, you have the capacity to actually deal with your debt.
Yes.
Because the more economic activities, you get more tax revenues, which can then fund, your expenditures and reduce the deficit. Okay. So it never came as a surprise, but it's just that we were always fragile, when it came to debt sustainability, and the pandemic was what threw us off. And unfortunately, these downgrades do not help, because what happens is that it leads to self-fulfilling prophecy. In other words, once there are downgrades by these, international credit rating agencies, then investors are going to react to those downgrades and are not going to be willing to either buy our sovereign bonds, or if they're going to buy them, they're going to expect very high interest rates, which is going to be very costly for the government. So the government will need to look for alternative means of financing their budget deficit at a time that they need to embark on expansionary fiscal policy, where government has to invest in capital projects.
Okay, let me take you up on those points. You mentioned two areas I want us to follow up on, and that's the reaction of the markets. And we've seen that in the past few weeks with the downgrades that have happened. Now, economists have warned that the fast rising debt levels, the high interest rates are putting the country at a risk of a debt crisis. The budget hole works out to about 37 billion Ghanaian cedis. That's about $6 billion. And debt as a share of the gross domestic product is forecast to reach about 85% this year. 85%, that's a staggering amount. And actually puts, I think, it puts Ghana second behind Sri Lanka in some of the emerging market situations. Now, some analysts have even said that interest rates alone will absorb 46% of government revenues. So do you agree that as of right now, Ghana is facing a debt distress situation? One or two bad things happening on the market, one or two bad policy initiatives that go the wrong way could put the country squarely into a debt crisis.
So we have the potential of entering into a debt crisis. I'm not going to deny that fact. But the truth of the matter is we had gone to IMF in 2015. So what I'm trying to say is that there's no surprise here. We knew that we had a challenge. Under the previous government, we went to IMF and gave us a concessionary loan of $1 billion. And we committed to fiscal consolidation. In other words, our budget deficit to GDP ratio wasn't supposed to go above 5%. Right? So we had to actually make sure that we rein in our expenditures and find ways to generate more revenue so that our budget deficit was consistently below 55%. So there was a clear plan in terms of how to rein in, our debt crisis situation. Now, then came pandemic and things went a bit haywire. So the budget deficit to GDP ratio for 2020 obviously was above double digit. Now there's a clear plan to bring it back to below 5% over a 3-year period. The question then is how would the government actually go about executing that plan successfully, and convincing investors that they can actually do it.
So I want you to hold that thought, because we're going to get into the fiscal consolidation plan, but I don't want to lose this. You also mentioned earlier that now, because the international market is tight for Ghana, Ghana has very clearly said it has to look at other ways to raise money and to bridge its fiscal deficit. And it was also in November of 2021 that the Minister of State for Finance said the same thing. So what are the options that Ghana has available when it looks to borrowing to finance the 2022 budget? What options are available to Ghana?
So obviously, you can always look inward to borrow domestically, right? And domestically means that you're going to borrow in your local currency as opposed to going to the international market and borrowing in foreign currency. So you can borrow domestically. The problem is that the interest rates are going to be higher. Any investor will have to factor in the ability to convert the returns into the currency of interest, let's say USD, and then enjoy those returns. So it's going to be a challenge because you're going to borrow more domestically, and it's going to be at a very high interest rate because you need to factor in the exchange rate element to it. And that's the reason why the government has also focused on inwardly generating more revenue, especially at the time that we've not been able to expand the tax net to rope in the informal sector so that everybody pays their fair share in terms of tax revenue and therefore investment in capital projects for all mutual benefit. So really, they have very limited options. Two things: make sure that you raise tax revenues, plug tax revenue loopholes, make sure that you broaden the tax net. Hence the introduction of the now controversial yield tax, yes, which is supposed to be a bit more broad-based and should be able to bring in an additional about 1 billion.
Josh? Okay, I think having some connection issues there, but mentioning the very controversial e-levy that Ghana is looking at implementing as one of the ways to raise more money. Ghana also has the option of going to, as he said, the domestic market in order to raise some of that money. And there is the potential as well for syndicated loans and borrowing from bilateral sources to avoid high costs on the international market. But when we come back, we're looking at the downgrades. Now, Ghana is not happy and has pushed back at the downgrade, particularly the one from Moody's. The country accused the agency of omitting key data in its decision and of having institutional bias against African economies. Is there some truth to this conversation? We'll pick up this piece of the conversation with my guest after the break. Partner and head of transfer pricing at Andersen here in Nigeria. We're looking, of course, at the situation around Ghana's liquidity crunch amid ratings down. Why are you calling? Can you hear me?
Yeah. Hello.
Okay, yes, I can hear you. Okay, fantastic. Thank you. Still with me is Dr. Josh Bamfo, partner and head of transfer pricing and economic advisory services at Andersen, Nigeria. And we're looking at Ghana's liquidity crunch amid a ratings downgrade. Now, let's focus more on these market reactions. In the space of 3 weeks, 2 international credit ratings agencies have downgraded Ghana's status. Fitch reviewed the country's status from B to B-, while Moody's cut Ghana's credit rating from B3 to CAA1. S&P Global Ratings actually affirmed Ghana's rating at B- with a stable outlook. So, Josh, let me start from there before we get into how Ghana's been pushing back. Do you think these downgrades are in line with the two picture of things?
So I think there's clearly there's some basis for the two credit rating agencies for downgrading Ghana's credit rating status. However, because clearly, if you look at the debt to GDP ratio, the fact that it jumped from 62% to almost 80% over the 2020 period, and the fact that we still are going to incur some significant level of budget deficit for 2021 and for 2022 before we're able to bring it down below the 5% threshold that was agreed with IMF as part of fiscal consolidation. That obviously gives them some concern. And they believe that their responsibility as an independent credit rating agency is to actually inform investors, the public, about those type of risks. I think the counter argument or the pushback from Ghana and Ghana's government and some of the African countries is that, especially during a crisis period such as this, it's important that you have a more holistic view as to how the economy is going to bounce back from the crisis, because almost every country went through a crisis during 2020. However, there appears to be a perception that these credit agencies are quick to react when it comes to the developing countries, especially sub-Saharan African countries, as compared to other jurisdictions.
Okay, so Dr. Josh, so sorry, I apologize for interrupting you, but for the benefits of the viewers, let me give them the statements that came from the ministry. So Ghana's ministry said in a statement that it had appealed against the downgrade and said the ratings agency's concerns were largely addressed by fiscal consolidation measures outlined recently in its 2022 budget, anchored on debt sustainability and a positive primary balance. The agency ministry, I beg your pardon, alleged that Moody's decision to downgrade its credit rating was made by omitting key information and revealed an institutional bias against African economies. The African Union's African Peer Review Mechanism also supported Ghana's criticism, calling on Moody's to review the decision and its coverage of the country. So, Dr. Josh, when you talk about this institutional bias that might be in place and doing some research, it was interesting to find out that the day or 2 days before Moody's released this decision was the day it apparently appointed one individual to assess Ghana's economic situation. So that was part of the criticism that Ghana also had. And then the fact that they're not working with a Pan-African agency. And it's just a few days later that Moody's now said that they were starting some kind of partnership with such an agency. So are these criticisms, maybe Ghana is the only one that has spoken it out, but the criticism seems quite fair. That's what I'm getting from you.
Exactly, because it's not only Ghana. In fact, at the peak of the pandemic in 2020, 10 countries in sub-Saharan Africa had their credit ratings downgraded at the peak of the pandemic in 2020, including Nigeria, including South Africa. At the time, South Africa's debt to GDP ratio was around 62%, and they couldn't see how, with the devastation of the pandemic in South Africa, how they were going to actually deal with the pandemic and be able to deal with that situation. So it was downgraded. So what we're basically saying for this part of the world is that, given that globally, almost every country suffered from this crisis, what becomes important is how they respond to the crisis, as opposed to looking at the current situation and just looking at the negative side of things, just the debt side, without looking at the fundamentals of the economy, how the economy is going to bounce back, and then deal with the debt situation. Now, you look at US, for example, right? It has the perfect credit rating, AAA. We all know that US pumped in not less than $5 trillion into the economy to deal with the pandemic. Debt to GDP ratio shot up to 130%. We are not saying downgrade US to a junk bond, no. But how were they able to maintain a perfect rating of AAA when they had to deal with such level of debt accumulated within a relatively short time? So there's this perception that there's some level of bias towards the advanced economies, because once you downgrade the sovereign bond, it adversely impacts corporate bonds that are generated within that particular jurisdiction. So there's this argument that there's some conflict of interest because these credit ratings wouldn't want to see the economies where they are located also suffer. We saw that during the financial crisis. Some of the arguments that were labeled by the US government themselves against these independent credit rating agencies was the fact that they didn't warn the public about the riskiness of some of the debt instruments that were issued that were based on the housing crisis, during that particular period. So there's always been some conflict of interest arguments made against these credit rating institutions. And there's this perception that there could be some bias towards African countries. So it's not only Ghana that is actually bringing up this issue. Other African countries have brought it up. South Africa has done that. And even African Union is thinking about it holistically. So I don't want to focus so much about that particular issue. I think Ghana still has a problem on our hands, and we need to really look at how we deal with that situation. How the credit rating agencies actually rate us, is going to be fully dependent on them. We might have to manage it one way or the other by giving them full information and forcing them to make use of the full information in making side decisions, rather than having a very myopic view about this particular region and then being quick to downgrade us when they don't do the same for the other ones.
For other countries. All right, so you had mentioned the fiscal consolidation moves that Ghana is making. I'll use that to see where we wrap up now. So when the ministry was responding to Moody's, it said that Moody should have taken into consideration some of these fiscal consolidation moves that are being made and measures that have been laid out in the 2022 budget. So let's end the conversation there. What measures is Ghana putting in place, particularly in this year with tight international market for them, a rising debt, both domestic and international situation, and sustainability being an issue? Now, the government has not fully come out in response, but they say they believe in the team that they have in place to be able to ride out this issue. We see $27 billion of foreign debt, the worst start to the year among emerging markets for 2022. That's according to the Bloomberg Index. And again, as I said, the debt is expected to get to 85% of the GDP. So what measures is Ghana putting in place to identify and address this?
Yeah, clearly Ghana is in a very challenging position, and there's no doubt about it. One of the very clear measures is to look inward, to either borrow or to generate additional tax revenue. At the same time, they also need to look at the expenditure side. They've argued that they're reducing the expenditures by 20%. But by reducing expenditures, you need to be very mindful that you are reducing those expenditures in areas that you've had excesses, and weren't very productive in terms of generating growth for the economy. So those are the two sides that you need to look at. We need to make sure that as much as we want to cut down on expenditure, we don't cut down on expenditure on capital projects that are necessary to continue to make Ghana the destination of attraction for foreign direct investment, and make sure that domestic investments also go up to create opportunities in terms of jobs, and therefore make people's standard of living better in Ghana. So that is on the expenditure side. On the revenue side, what has become very important is to introduce, a new tax that will be more broad-based and can rope in the informal sectors that have not been able to contribute their fair share to tax revenue in the economy. Unfortunately, with the hung parliament where opposition and the current government are almost split 50-50, it's been very difficult passing that particular bill, because obviously nobody wants to pay more taxes. So the public has become very averse to the idea of introduction of taxes on electronic transactions that they make on their mobile phones. So they've not been able to pass it yet. The government believes they'll be able to pass it, but public sentiments are against it. And it's important for them to educate the public to understand the reason why this at least should be a stopgap measure, given the challenges we are facing today. Ghana is going through a digitalization program where everybody's going to have what they call a Ghana card, and everybody's records is going to be digitalized, such that we'll be able to rope in the informal sector so that they can pay their fair share of personal income taxes and company income taxes, and so that we can be able to have better tax revenues and bring down the budget deficit. So there's a clear plan, but it's not going to be smooth. It's going to be very important and incumbent on the government to convince the public that they actually need this levy, and they are also willing to cut down on the excesses on the expenditure side,
on its own side,
so that they can have some goodwill and credibility, and people will be willing to then pay their fair share to get us out of this mess and make sure we have sustained economic growth and create job opportunities for the teeming masses of the Ghanaians that are in the labor force.
All right, and two important words there in any tax conversation: goodwill and credibility, especially for African governments when it comes to tax conversations. Dr. Josh Bamfo, as always, a pleasure. Thank you so much. I know we'll be touching base with you throughout the year as we get into some more issues surrounding Ghana and other things. Thank you very much.
Thank you very much, Dr. Right. for having me. Thank you.
And one of the ways that government has also said that it's going to address things is that in January, the government said it would issue just over $4 billion worth of bonds in the local currency in coming months to help pay its bills. Ghana also wants to raise just over 75% of its financing in domestic markets in 2022, although that would compound the risk of a simultaneous banking crisis in the event of a default, as government debt or claims already represent 31% of Ghanaian banks' total assets. There is a plan, but there is a challenge. There is a crisis right now that Ghana must face and adequately address. The second largest economy in West Africa. Let's see what happens next. You're watching Business Edge, and what happens next is NC4 to watch. And NC4 to watch wraps things up for this week on Business Edge. And we start where we actually started earlier this week, and that's with a look at crude oil prices. Now, oil prices have eased on Friday as hot U.S. inflation fanned worries about aggressive interest rate hikes, and investors await the outcome of U.S.-Iran talks that could lead to increased global crude supply. Brent crude futures fell 25 cents to $91.16 a barrel, while U.S. WTI crude declined 15 cents to $89.73 a barrel. Hundreds of truck drivers are stuck in a blockade of a major export route out of Sudan into Egypt, hampering exports of camels and other livestock as opposition to a military takeover has fueled festering grievances over trade. The blockade of the route, known as the Northern Artery by the protesters, using rocks and other barriers to barricade the road, began last month after Sudan sharply raised electricity prices for farmers. Kenyans are now able to share their opinion on a growing trend among central banks across the globe. Kenya's central bank has invited the public for views on the potential introduction of a digital currency. The East African country has been a major pioneer in mobile money payments, with Safaricom's M-Pesa in 2007, but its central bank has not issued a digital currency due to concerns about the risk. And during the latest State of the Nation speech, South Africa's President Cyril Ramaphosa said that the electricity generation capacity must be expanded in order to tackle an unreliable power supply that was holding back the economy. He added that his other aims for 2022 include overcoming COVID-19, infrastructure rollouts, increasing local production, and creating jobs. And that's Business Edge for this week. If you've missed any of our episodes that have focused on African finance, the economy, and business, make your way to, of course, our social media timelines at News Central TV. Download our mobile app and subscribe to our YouTube channel. You'll find all of the fascinating conversations there. Until Monday, when we, of course, are back again, putting business right here on the continent front and center. I'm Tolu Lokpe Adileru Balogun. Have a fantastic weekend.